Morning, everybody. Happy Tuesday. This is the morning show. Can you hear me? Stock Market TV, Spencer Israel with you this morning. Are we live? I think we're live. Let me just check YouTube. I'm pretty sure we're live. Sometimes my YouTube takes a minute to catch up. Okay, we are live. Welcome to the morning show. Special morning show today. We were originally not going to do a show. JC is visiting his family in Miami. Steve was visiting JC, visiting his family in Miami. So we're like, no Steve, no JC. What do we do? Wait a minute. We got other people. We got people like Jason Purvis. We got people like Patrick Donawilla. We got people like Sam Gatlin. So we are doing a show today. Right now, I've got Jason and Patrick with me. We'll have Sam on in a few, and that'll be the show today. It'll be a hodgepodge kind of a day. We couldn't not do a show. Things are just too interesting right now. Like, yes, the market's always interesting, right? It's always it's always an unknown, but like there are degrees of interesting. And right now it's like way up here, right? Because no one knows what the hell is going to happen on any given day. So let's talk about it, shall we? Chat, are we good? We're on the same page? Yes, we are on the same page. Great. I'm going to roll my intro, bring on Jason, bring on Patrick, and we'll get down to business. Yeah, look at this. Look at this crew.
Oh, what's going on?
Look
Top
at
of
this.
the morning to you.
Look at this gang. This motley crew.
No place I'd rather be on Tuesday morning after a market crash.
That's right. Patrick, I thought about you. I was going to call the show Turnaround Tuesday, but I didn't because turnaround is a strong word and it's just too cliched. It's too cliched and I couldn't bring myself to do it.
We would have jinxed the market too. It would have just crashed right after that.
That's right. That's also right. Anyway. All right. I haven't spoken to either of you guys in a minute. So why don't we just like start with like tell me what you're thinking, what you've been thinking the last week. It's been a wild week.
Man, it has been interesting. There's just been so much going on that I think a lot of people were caught off guard by, and that's what the market is saying. And that's the most important thing to think about when you're looking at these huge moves in the market, whether it's going up, down, sideways. Like, what exactly is the catalyst, and how out of favor is it? And the situation with Donald Trump and the tariffs is just it overshot any analyst expectation. It was way above and beyond whatever anybody else was thinking, which caught the market off guard completely. And then the crash kind of happened. But to me, there was something that was significant about that, which is how much worse can the news actually get now? If another country comes out with retaliatory tariffs, is that surprising anymore? I don't know. I don't think there's that much surprises left. So maybe the market's saying that today. It's a one-day move. I'm not going to read into it too much. Unless there's some big fundamental event that happens, like the Fed comes in or something to save the day. Powell basically said he wasn't coming in to save the day as well. So I'd be surprised to see that. So I really do like the just to look at the market right now and just kind of take a step back and being patient, I think, is the key. I think nobody wants to hear that. Everybody wants to hear bottom, top, short, go long, and really it's just sit on your hands, wait till this thing really bottoms out. Even if it goes up a lot, it's going to go up, down, sideways, and then it's going to carve out a little base, and then you're going to get somewhere to risk manage that trade rather than just trying to guess where the bottom's at and trying to buy it.
Yeah. I think yesterday was a very good dress rehearsal for what would happen if we got a headline that said, oh, never mind, guys, our bad, no more tariffs, right? Oopsie doopsie, because we got that headline sort of yesterday at around like 10 a.m. There was a headline, and if you want to bring up the slide too, there, a headline about a 90-day pause on all these tariffs except for China, by the way. That was not a real thing. I mean, the headline was that happened, but it wasn't real. It was actual literal fake news. But that didn't stop the market from taking it seriously for a few minutes there, and we ripped. And I was thinking about this rip all day, and we talked about that the other day too, which is like, this is sort of the risk for shorts, is like this headline can theoretically come any time, right? And that changes things 100%, right? 180 degrees here. So a fake headline was responsible for like a huge rip yesterday morning. And so now we know like the real thing would be that times 10, right? I mean, it would probably be a serious rip. So I was thinking like, shoot, do I gotta like start nibbling in a little bit because I'm pretty flat at the moment, as flat as I theoretically can be. And I don't want to sort of, miss that. But also to your point, this isn't over. So we don't know. I don't know. I just thought yesterday was a great Patrick. You're on Twitter all day anyway. Was yesterday not one of the most interesting days to be on Twitter in a very, very long time?
Yeah, but I mean, unfortunately, I am on Twitter a lot, but no, it really was. I mean, it was such a wide range day. Like you were saying, that giant rip in the morning, it kind of did a lot of damage to the charts. It kind of made it hard to find like a real trend, even shorter time intraday, because after that, it was just kind of all over the place.
Yeah.
But another unique thing about the last week or so is just there's been very, very few places to hide. Traditional places, safe havens, things like that, haven't really held up as well. I mean, at first you saw things like staples and utilities holding up well, but those got shot. I mean, those were last time I checked underneath their prior highs. And then you had bonds working for a little bit, and then yesterday that came undone. Pretty notable reversal there in bonds and yields. So just relatively few places to hide. Europe and China were working for a while, and then last week they got hit. Yesterday China got hit again, and Europe did as well. So just the lack of places to hide, really. This has really been a pretty broad sell-off across asset classes.
Yeah, we thought maybe we could hide in Bitcoin for like a hot second there. That didn't work out too well, right?
Yeah.
Jason, you're the macro guy of the group. Where is there to hide?
So I like what Patrick said at the end there. One thing to think about when you see an event like that is that it's a liquidity event. You'll have people come out of the woodwork like, oh, maybe this, you gold bugs are dumb. You guys lost money. See, gold went down. See, silver went down. See, and the stock guys are yelling at each other. All these stocks went down. Everything lost money. And it's because it's a liquidity event. What a liquidity event means is that everybody needs money. And everybody's trying to get their cash out of the market to either cover margin calls, whatever it is. And so like you see this scenario happen, great financial crisis, COVID, and so on, where there's just nowhere to hide. Usually if those continue, they turn out very interestingly, which is they go down and there's nowhere to hide, but let's say bonds. And then at some point bonds start to sell off. And then the only place that's really a place of value at that point is the dollar. You'll see the dollar kind of spike at that point. So it's an interesting event that happens in markets, and it happens a lot. So it's kind of the reason why, like, if as a trader, you always have to kind of have a catastrophic stop. And what that means is if you're long a lot of things, like let's say you're a long only manager with equities, or you're a trader only trading equities. And so if you're sitting there only trading equities from the long side, and then everything hits a stop immediately, how much does your portfolio lose? And that's something that you have to kind of think about as a trader, because these events do happen, and they happen a lot, and they're pretty frequent in markets, but they don't happen all the time. But you got to be ready for it. So to me, just where to hide. There was nowhere to hide last week. I thought gold did pretty well considering how bad everything else got hit. I think gold was sustaining over 3,000. I think it stayed over 3,000. I'm not 100% sure on that.
Closed below there yesterday, but I'm glad you
I
brought
think
up
it closed
gold
below
because,
it, and then it got back above it.
yeah, here we are back above it. I'm
Yeah.
glad you brought up gold, right? Because that was kind of like one of the more obvious places to hide, but didn't really. And it was great up until those last two nasty days at the end of the week last week. But yeah, I think that's a good point. When you mentioned that sort of liquidity event and using it for a source of funds, my mind instantly went to Apple, because I mean, you look at that chart in Apple, and it's exactly what Jason's describing. Just kind of people selling what they can, and that chart has just been, vertical drop lower, just taking the elevator down.
Yeah, and that's where you get these massive drops, and that's why it's always important to continue to kind of sit there, understand where you're at in the cycle sometimes. Like people have been looking at technology and going, well, yeah, technology has been going up for so long. This can happen at some point. We've been talking about it a bunch on here. Semiconductors relative to the S&P 500, technology relative to the S&P 500. We've been posting these charts like crazy. If these break down, this can happen, and now those broke down. That's exactly what happened. So I think it's something to just kind of keep on everybody's radar here, which is, I don't know how much lower we have. Do I think we're going to go much lower? I'd be surprised, honestly. But once again, I don't want to take a position long or short right now. You already missed the short. You don't want to get long right now because you don't exactly know where it's going to stop. Sure, if you're a long-term investor, you're just buying common stock, sure, you could buy some and just sit on it. But as a trader, me trading futures or trading options, like, I'm not going to do that at the moment.
All right. So then I want to ask both of you the same question I asked Steve yesterday, which is, how will you know? When will it be time for you? What is your signal or signals?
Do you want to go first, Patrick?
I mean, I'm kind of taking this like signals holistically, and we'll see one by one. I don't think there's necessarily one level or one thing that I'm watching in particular. I mean, I guess I'd say Bitcoin has been a great leading indicator. It's kind of held up that role really well, and not just that, but also the more traditional kind of leading indicators like semis, things like that. We always preach about how semis and home builders are a great leading indicator, and they still have been. Yes, they've been breaking down, but they've been still leading the market, and that's kind of been a good gauge for the market. So looking to them for signs of leadership and looking at them for the next move, I think would be wise here.
What's going to be hard is Nvidia is going to go to like 120, like one of these days. Like it's going to get. It's going to be really hard for me not to get like suckered into that. Right? Like,
well, it does seem like a lot of people got
happen.
short in these last week or so. It takes a second. First, you got to get out of your longs, then you got to figure out a way to short, how you're going to do it, and all that. So now that everyone's short, it'll be interesting to see if we get the rebound. And it's kind of like we're in the same spot that we were heading into last week. We started last week with a 3-day rally before it all got undone after hours Wednesday. So heading into last week, it was kind of like, okay, we're due for a bounce. Question is, how far does it carry? And you're already starting to see people, thinking about, are we going to get a V bottom, or is it going to be more of a basing type thing? So people are already thinking about that recovery. So at this point, like, the rebound is kind of imminent, but it's just like, okay, how much do we get on it? How is it going to be this sharp rebound, or is it going to, be more of like a slow bottoming process kind of thing?
Well, you know how like we're always fighting the last battle, right? So the last battle, 2022, that was like a very slow, gradual bottoming process,
yeah.
right?
I mean, you're describing recency bias. Yeah, perfect.
Yeah, for sure, 100%, right? So, but also like, what's gonna solve this problem, this situation we find ourselves in? Like, what's gonna solve it? There's really, not much that you can do. I mean, it's got stuff from the White House, right? Factories or stuff from the
Let's
White
go
House.
back through the last couple V bottoms then. Like, the last couple V bottoms would be 2018 and 2020.
Yeah.
So what happened in both of those times? So 2018, December 26, 2018, Jeremy Powell came out and he said, well, actually, let's go back a little bit further.
Did you just call him Jeremy Powell?
19th. What?
Did you just call him Jeremy Powell?
Yes, Jeremy Powell. He started getting into it at that point, and he said we were a long way from neutral. I think that was December 19th. We're a long way from neutral. Then the market basically slides right through Christmas. He comes on TV December 26th and says, we're at neutral. We're great. Everything's fine. And the market just skyrockets from that.
That was the tech sell-off, right?
Yes.
Yeah.
So that was the year that 2018 was the year that Facebook, Apple, Microsoft, all of them just kind of got hit. Amazon.
Yeah, that was a great year until Q4.
Yeah, I'm glad you brought it up, because I was talking with someone about 2018 this weekend.
It wasn't a great year, but it wasn't a terrible year.
Fine, whatever.
It's an easy one to forget, though. I think that sell-off happened so quick, and I think it wasn't like a true 20%. We got something funny like 19.7 or
Yep.
something on a closing basis. So like, you know, some people won't call it a bear market. It won't wind up on those studies as a bear market in some cases, but like, you know, so it's an easy one to forget about. But there are a lot of parallels. I think the narrative then was China tariffs. It's easy to forget Trump was president under that one too. So there's a lot of similarities, I think. But sorry, go ahead.
No, no, that was perfect. That was exactly what I was going to bring up too. So there are some similarities, and then let's jump into 2020. The market comes crashing down. March 2020 basically starts in February, right around the same time this one started, which is pretty interesting. And then the Fed kind of comes out and they say unlimited QE, and finally that's where kind of the bottom starts to happen. They start to just send money out to people and so on. We see that bottom happen. So that's what creates these V bottom scenarios. Is usually the Fed. In 2022, the difference was that there was no quantitative easing. There was only raising rates. there was basically higher for longer and so on. So Jay Powell was just kind of on that scenario of, hey, higher for longer, this is exactly what we're going to do. We're going to just let that continue to happen. And then the markets just slowly gradually created a bottom at some point in October of 2022. So now we're here today. Like, could we see that type of scenario here? It's possible, because anything's possible, but once again, I don't know what's going to be that catalyst to really pull the market around to the upside here very quickly, even though it can happen. I don't think the economy's in that bad of shape here in the United States. I don't think we're having as many problems as people might feel like we're having right now. Just by looking at the data, that's not how I feel about the economy. But at the same time, I'm not sure if we get that V bottom that everybody's looking for right now. Just quickly. I just don't think it'll quickly resolve. It will probably resolve,
I
but not
think,
quickly.
Jason, I think the only catalysts are A, the White House, or B, just pure seller exhaustion. And we are nowhere near B, right?
Mhm.
B just started.
Yes.
Right.
Good
So
point.
B takes, it takes time. So I don't know, right?
Yeah.
But
we are getting some signals. We are getting some signal. Like we got signals probably starting 3 weeks ago that we are seeing some extreme sentiment signals so far. So we are seeing some extreme sentiment signals and some of these things, but once again, it's kind of like when there's a real bear market happening, those signals stay extreme the whole time. And that's pretty normal. The fear greed index, which I don't use, but I saw somebody share it the other day, was at like a 1 or something. Like I've never seen that before. So I think that we are seeing some of that, but at the same time, it's more of we need to kind of figure out like what's gonna, like with the Fed scenario, and liquidity is kind of tight. The only thing that's kind of boosting liquidity right now is the dollar crashing so hard is kind of helping that. China is also probably going to come out with another bazooka stimulus pretty soon. So we continue to kind of see these scenarios set up. So there is possibly more liquidity coming in. And I think if we saw that happen, whether it's China, the United States, whatever, I do think that could be a catalyst for a bottom, because we are seeing some extreme sentiment readings. So it's a tough one here. I'm not ready to just say, hey, we're going to stop here. Everything's great. But I am ready to kind of say it could happen.
Or Patrick, in the meantime, I mean, I saw it in your newsletter yesterday. I saw it in JC's note this morning. They're talking about old resistance being new support, right? We are at a logical level, right? So maybe, just maybe,
It's possible.
Yeah.
I don't know, right? It's possible.
It's one of my favorite patterns to use, is just old resistance turning into support. When you kind of see that pattern, if you go back and look at any chart on anything, these are very significant levels. Everybody's watching it. Some people bought new highs. Some people just are interested in those levels because they're also analysts like us. Some people, a lot of the time, indicators kind of come to those levels as well. I think a trend line actually comes right there. So there's a bunch of reasons to kind of look at this level and think that it is possible. And once again, different strokes for different folks.
Right.
If you're looking at the market and you're going, okay, well, I have common stock, I'm just buying unleveraged things, or I'm buying the SPY ETF for my retirement, probably not the worst thing to do here. I don't have any problem with that. But I think as a trader, you want to have a little bit of momentum so you understand where you're going to put your stop loss. So it's not too like if you're just going to put it somewhere, let's say you buy a very red candle last week, let's say you bought on Friday and you put your stop loss right under the bottom of the candle, you just got hit again. And then you do the same thing that yesterday morning, even though the market went up, it came all the way back down and hit your stops once again. So, as a trader, it's like you kind of want to see a bottom kind of carve out, and that way you can buy a little bit higher, but at the same time have that risk management, because you should always think about losing money over everything else, because you don't want to lose money. So if you just kind of hedge for that downside always, it opens up the upside. And that's only reason why I'm saying it's probably a good idea to just sit on your hands, wait a little bit, and then let that thing break out a little bit. Maybe a 10-day high, maybe get over a 10-day moving average. I mean, right now there's just no signals to say let's buy this thing at all.
Well, the other side of that is people like me and you, Patrick. We've been conditioned to just buy the dip because that has always worked, right? We've been conditioned to buy U.S. stocks and buy the dip. Right. And now, we're talking about a changing world order, a new global trade regime. Like no one even knows the implications of that. But I know it flies directly in the face of what has worked for me and you, right? For our entire lives as investors. So how do you square that circle, right? It's like, oh, here's what I've always done. And it's pretty much always worked, right? Versus that might not work anymore. You know what I mean? It's like it's a very hard thing to navigate in your head. So,
and I'm not saying it can't work in the long run. I'm saying like as a trader, it's just a different thing. Like as a trader, it's like, for example, if I get on here today and I say, hey guys, take this prediction down, the S&P will be higher by the end of the year. I will probably be right. Like most of the time I'm gonna be right. But what if it goes down another 10% before that? How did I trade it? Did I get stopped out a million times? Did I buy it perfectly at that bottom? Like, and so on. Like those things, those are the reasons why you kind of have to think about all of that. Even in 2020, for example, the market started crashing. It was 10% down. Everybody in the world said, this is a great opportunity. Let's buy this today. And a bunch of people bought it. And then it fell another 20% after that. So, and once again, a lot of them got lucky. The market V-bottomed, but once again, do you want to like really trade on luck? And not to mention, do you want to endure a nasty drawdown like that? I mean, if you're trading like anything with leverage, you're basically screwed at that point. 20% drop could be 50% of your portfolio. So, you just got to really kind of think about it. It's not that buying a bottom or buying a dip is bad. It's that waiting until you get a little bit of momentum behind it is the key. I had a trader that mentored me when I first started. Great trader, actually just and found bottom. So it's the complete opposite of what I do, but he's great at it. But at the same time, he never bought on the way down. He always waited for momentum on the way up, getting up and over it was a 20-day high or open over a 10-day moving average, something like that. And this getting that little bit of momentum just lets you know you're right. Because that's the thing, we're waiting for the market to confirm that we're right. Today is not enough time to really tell me I'm right or wrong. But if we got over 10-day moving average, we start making a 10-day high, something like that, say, hey, we're doing well.
Yeah. All right. One of the great things I love about our crew and what we have here, as Jason said earlier, is different strokes for different folks. People are doing different things, and because they're doing different things, they're looking at different things as their indicator. Patrick might be looking at semis and homies, right? Jason is not. Kenny Glick is not either. He's looking at the UVXY. That's what he's looking at because he's day trading right now. We got Kenny Glick. He's here. I'm going to bring him out for a few. We'll talk about the UVXY, what it says, what he's doing, and let's do it.
It's been a long time coming. They ain't come for my clock, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hola.
Yeah. Yo.
Kenny.
What's up, boys?
Kenny Glick, the
Big
man
Glick.
who owns more college swag than any other person I know.
Yeah, and this
Okay.
hat. I don't know what it stands for, but some say something sexual.
Wonderful.
Yeah.
Great.
Yes. The morning show. What's
Kenny,
up?
what
What's
are we
up, boys?
what are we watching with the UVXY today?
I haven't had a chance to calm down from yesterday's action. I don't know. Has anybody seen a 10% move of the entire market off lows?
Mhm.
I
Yeah.
don't know. I think maybe one time ever, right? So yesterday was some sort of miracle.
Yeah, I saw like the biggest intraday range since the flash crash or something like that.
Yeah, well, the flash crash, you didn't really recover. I think it was COVID. There was one COVID day where the Dow was down 2,700 points and ended up 1,800, which was absolutely incredible. But the sad part about yesterday was it started out like a normal trade. We had some, pre-market strength, and I was like, all right, we can't trust the pre-market strength. And then we got the rollover. We were short first, and then UVXY started to tick down, and we're like, all right, little faux show bro action. All right, let's cover some shorts here. All right, Apple starts going down to 175, and again, the whole thing about bear markets is, most bears are angry because they miss stocks going up, so they're all pissed off. And there's always that price, the bulls who are angry that, oh man, if the stock would only pull back to this price, I would load up. And then it's there. Oh, I ain't touching this thing now.
That's me. How'd you know? That's me.
Apple was that stock yesterday. I was like, I got to buy some at 175. I'm thinking of buying 400 shares for the kids, my wife. I'm like, all right, I'm in. Next thing you know, it starts ripping. I'm like, well, okay then.
I'm out.
And then it's at 175. I mean, 175 gets you 177.50, which I thought would take a week or two. And it's 2 minutes later. And I'm like, all right, I got to sell some here. And then it's at 180. I'm like, what the hell's going on here? And then the afterburners kicked in, and we were buying the Qs. And normally a 2-point rip in the Qs is a lot. They were moving in 5-point increments. I was like, okay, I feel really bad about selling. And I was like, I think the market's about to go green. And then it went green and still tacked on another 5%. The Qs went from 420 to 443 in the matter of what? It was about 9 minutes. That's absurd. Sometimes you see a year go by, you don't see that kind of action for the entire year. So right back to this morning, first thing I did was buy. The Qs were red. The UVXY was red, telling us the coast is clear. And you had, QQQ breaking VWAP. So, classic old trade, same as yesterday, little pre-market low break, and then it breaks over the VWAP, little consolidation. So I'm in at 430, and I'm selling into this little chop zone right there. And, again, we were thinking about taking a short, but I'm not going to short much unless UVXY starts to rally and we break down under VWAP. But right now, the VWAP is right above where I probably was thinking about shorting that last breakout area, which is the 432. But this is a day trader's dream. And yesterday, again, I don't like saying you could have got rich, but you could have got rich. But most of the time, like I said, you buy a stock at 175, it's at 177.50. As a day trader, that's your goal. You're making days pays, weeks pays, months pay in minutes. You're not thinking 440 on the Qs when you're buying them at 409 45 minutes later. So it was bewildering a little bit and a little bit flabbergasted. But later in the day when things start to stable out, the better trade that I did, better on was when we had some stability, and you held VWAP. You kept chopping and chopping and chopping and kept holding. And I was like, all right, that's telling us this market probably wants to rally into the close. And we bought, some into the close. And, I was tempted to hold overnight, but why take overnight risk in this mess?
I was going to ask you if you've been going home flat every day or not.
The only thing I did, I sold a couple of naked calls way out January 120s on UVXY. They were trading at 5. I was hoping to get $10 for these things. I was really looking for some more destruction because if you watch the UVXY, the yen carry high was around 65. We didn't even get over 50 on UVXY. What kind of bullshit is this? Come on, let's get this party started. I was hoping to see UVXY in the hundreds yesterday. So when they start creating 250 calls 6 months out for like $20, like the old days, that's what I was looking for. We didn't get any of that. Even though this has been some chaos in the streets, it's still, like you were saying yesterday, we talked about the buzz phrase. What is it? Controlled sell-off?
An orderly sell-off.
Orderly sell-off.
This is too orderly for Kenny.
It really is.
This is not chaos enough.
Let's orderly sell-off.
I want to hear more people saying the system is broken. I only got one black swan comment yesterday. I was like, it's not a black swan. They've been talking about tariffs for 6 months now. It's not like this wasn't about to come. Black swan's a little bit different. Something that nobody saw coming. And yeah, it's something that feels different. I don't know. This has still been just a very controlled, orderly market, and it's pretty great. I mean, it really is.
Kenny needs to see like trading platform outages, exchange data outages, like circuit breakers. That's what Kenny needs.
There was no halts either. Exactly.
Yeah, we came close.
The
We came
weird thing
close
is,
to one.
yeah, UVXY got halted. Now that's bizarre
That's
because
stupid.
you didn't halt the VIX, you didn't halt other products, but UVXY got halted for a moment there. I think it was on the way down. I don't remember.
Yesterday, UVXY got halted yesterday.
Yeah.
Oh wow.
It was a bizarre move, but I don't know why they would want to halt that. I don't know why they could halt it because the other products were still alive. So it was a bizarre moment. But a lot of bizarre stuff was going on. But right back to same old thing. Pre-market strength, and again, if you're looking to fade this market, I'd be a little hesitant. Let's see how it plays out. Give it the 15 minutes. There's no shame in waiting right now. Okay. You want to take the easy money trades. The easy money has been the long trade so far on the Qs. UVXY is telling us the coast might be clear, but any strength in UVXY, you'll probably see some more selling. And again, if you miss again, you're going to get some fear of missing out today also. People like, oh man, I should have bought yesterday. So you're going to get a lot of that. And then I think there's probably still residual selling because people are nervous about what's coming. So it's a very, 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 frightening market, but very, very, very profitable if you know what you're doing. And again, just picking your spots and just chilling out. It's not, you don't want to be going too crazy in this market. You get on the wrong side on one of these trades, you're going to get killed.
It's a great lesson, guys. If you don't, if this isn't enough for you, and it probably isn't, Kenny's doing this every day in his room, living a day trader's dream. Get involved. Hit thebid.com. He's there right now. He'll be there through the open. He'll be there most of the day. The room is open all day. And he's doing this every single morning, pretty much from 8 a.m. in the morning onward, right?
Well, lately it's been 6 in the morning. So
6 in the morning. Dear Lord.
Yeah.
The dude doesn't sleep.
I couldn't sleep. I fell asleep early. I missed that whole game. I fell asleep. Florida. I mean, I thought finally Houston was going to win, and then I woke up and Florida won.
You missed a good one.
It was.
That game last night cost me $200, but it was a good game. So
I missed the whole thing. But listen, if you guys want to go back to just the world of reality, I'm watching Walgreens. They reported earnings. I'm going to see how this pans out. You got a little gap, but it's being sold off right now.
Wait, what? Walgreens is they're getting taken over.
Yeah, WBA. Well, they still reported earnings, so
but it doesn't matter.
Oh no, it's over. There's a price set. I don't even know.
They're getting bought. Yeah, private equity is buying them.
Yeah,
all right. So
they're going to pull out of the market.
Yeah. They're going off the board in like 6 months probably. So.
Oh, okay. So forget.
Yeah.
That. All right.
No, I wouldn't worry about that.
All right. No, I just saw it on the list. They reported earnings. So
Penny, next week I saw Delta. They kick it off, right?
Well, Friday we have the banks. I think
the bank Friday.
Yeah. So we'll get right into the thick of things. And
again, Friday.
The buzzword is going to be tariffs, obviously, just like supply chain 4 years ago. So everyone's going to be talking about. I don't even know how anyone's going to forecast anything. So it's going to be a lot of chop. But I hope there's a lot of gap fades and gap buys. So that's what I'm looking forward to. And we'll start it off. Yeah, Delta Airlines is first, and then you got then the banks on Friday.
Yeah. All right.
All right,
Kenny.
Stay liquid, my friends. Be careful out there. Good luck, boys. Good seeing you.
Stay liquid. All right. What's going on here? How are things doing out there? Anything of interest going on?
No, still doing about the same across the board.
Yeah, things are kind of quiet. The Solana's up 3+ % today. Things are kind of quiet today.
Well, let's hop into the charts. We got a couple good ones here.
We got a few charts, and we got Sam in the house. So let's rip through a couple of charts, and I'll bring Sam on. And what do we have here?
Start on 3.
You want slide 3?
Yeah.
All right.
Let's do slide 3.
Here we go.
Yeah. So the S&P 500 just tapped a 52-week low. And to me, this isn't a confirming signal. I want to see a close when I'm looking at these type of indicators. For me, I literally wait for everything to close. If it's a weekly chart, I'm waiting for the week to close. So Friday's close. If it's a daily, I'm waiting for the close daily. So we didn't see a confirming low, but this is kind of significant because the S&P 500 hasn't hit a 52-week low since basically the one it had in 2020. So it hit its final low in October 2020, which is the last time it hit that bottom of a new 52-week low, and then it hit a 52-week high that next year, and then it just never looked back. Now we're tapping a 52-week low again. Not a confirming signal, but something to keep on everybody's radar this week. Because if we start to really hit new 52-week lows over and over again, that's a bad sign. That's a sign that we are headed into some form of a bear market. We don't usually see 52-week lows unless we are headed into something pretty bad in the market. So just wanted to put that on everybody's radar, just so everybody can take a look at that. Keep a watch on that one.
All right.
Yeah, we avoided that bear market print too yesterday, right?
Oh,
don't everyone would be saying
that.
it.
Don't do that.
I know. Trust me, I would be rolling my eyes too.
Well, here's something interesting, Patrick, and when people talk about bear markets or bull markets, it's always this like arbitrary 20% number, and it's like the volatility has changed so much over the years that using that same 20% is probably absolutely ridiculous.
But it's you can't standardize it, right? It's like
exactly
20% for the Nasdaq's different for 20% for the Dow.
I was talking about it with Sam yesterday. Am I even looking at like when I'm seeing COVID, for example, the crash bottom happen, and is that even a bear market? Because people who haven't traded for a long time would say that was a bear market. To me, that's quick. It's you basically had February, then March it bottomed, and then it turned right back around. Something like 2022 is more of a bear market, but like 2008 was an absolute bear market. That's a period of time where the market was just going down for a very long period of time. 2000 was another one. So I think that arbitrary number is just absolutely ridiculous. It's more of how long are we what's the duration of it? That's something that you always have to take into play. Can we catch a bid at all? That's another thing you have to take into play.
Yeah. And to bring it back to that chart we were looking at with SPY just holding that horizontal level there. I mean, losing those prior cycle highs to me would be more of an indication that we are in for one of those 2022 type prolonged bear markets, multi-month, multi-year thing. Whereas, yes, you could say, oh, NASDAQ or S&P, I know S&P isn't officially down 20%, but even if NASDAQ down 21% right now, you could call it a bear market. You could say it's the end of the bull market, but losing those prior cycle highs to me would kind of confirm that. But you ask any technician what their definition of bull market and bear market is, even they'll have different answers. Some use magnitude and duration, some combination of both. I know Willie Delwich, he'll use like new highs, new lows, things like that, or look at net new lows and net new highs. So there's a million ways to characterize it. But at least for me, losing those prior cycle highs would be a good place to kind of confirm that.
Are you saying that technicians are like economists in that they can't ever agree on anything? Is that what you're saying?
Yeah, that is a big problem with us technicians. Is we can't agree on the names for things. We can't agree on the thresholds for things, 20%, whatever it is. So.
I think it's the human psychology. I think it's just you figure out what works for you. I think that's the most important thing of trading, because it's like some people are going to be great mean reversion traders. Some people are going to be great breakout traders. Some people don't go long. Some people don't go short. You figure out what works for you, and that's kind of the key to being a good trader over everything else. So I think even though there's a lot of different opinions, a lot of the times, like for example, trend followers, we always laugh at our systems and like message each other, because most of the time when we get one signal, we're all getting the same signal in the next 1 or 2 days. So it's like, there's a lot of things that kind of go together. But at the same time, everybody, when they get on, a show, everybody disagrees, but really behind closed doors, I feel like everybody's a little bit more together. And if you're just looking at uptrends and downtrends, if we start hammering 52-week lows here and start going lower, we start closing down there, I would say, yeah, we're in a bear market. And I think that coincides with the level that you're also looking at. So it's all very significant at the moment. So for me, I'm just kind of sitting on my hands watching this thing play out. I'd love to see it carve out a bottom here. That'd be great. But we need to see more confirming evidence.
All right, I'm gonna bring on Sam. He's been waiting in the background here. Wait, what's going on with Wix.com today? What's that about? Is that a fat finger? What's up? 20%? That's not, that can't be real. There's no volume. That's not real. That's not real. Okay, I'm bringing Sam in, and he may have some charts to share with us.
Yo, I love that bumper, Spencer.
Hey, don't thank me. I didn't make it. Thank Izzy.
Well done, Izzy. Very well
Yeah.
done.
what's going on?
Of course, Spencer. I brought charts. I always have charts. I have way too many charts.
I know.
The one thing I do have in this world. Let's look at slide number 8, Spencer. This is a good one. I don't think a lot of people realize this, but relative to the median stock, gold is breaking out of a nearly 50-year basing pattern.
Oh boy.
So this is extremely bullish for the gold bugs and not so bullish for the stock market bulls. You can look at the value G, which is the denominator in this ratio. That's the value line geometric index, which is probably the best measure of what the average or the median stock is doing in the market. You can look at something like the Russell 2000, which is also a pretty good measure of that. But I think the value line does it better. And since 1998, there has been zero progress in the median stock. It's just been a sideways mess. If you look at something like the S&P 500, which is really just one of the best trend following momentum strategies ever invented, it's a very different look. That line just goes from the bottom left to the upper right, but it's been a different story for the median stock. And they're finally breaking down relative to gold to new all-time lows. So I think this is kind of interesting. Do you have any thoughts on this, Jason, Patrick?
I have tons of thoughts on this, Sam.
I know you do, Jason.
Sam and I talked about this yesterday, and I love this chart. Sam is always bringing up the best charts. But basically, what I look at it here is, people who kind of go, oh, I don't know about owning gold in the long run. For me, like investment wise, so this is different from trading. Trading, I'll buy gold, I'll sell gold, it doesn't matter. But long-term investment wise, like gold does have value in your portfolio, and it's a good way of diversifying your portfolio to store your wealth. And this kind of shows that. So I think it's a nice thing to kind of look at and just get an understanding of, hey, gold does actually kind of outperform a lot of things. Yes, it's going to always be hard to outperform the S&P 500. But sometimes it does that as well, and it's
doing that right now.
Yep, it's doing it right now. I actually included that chart. I think it's slide 4 if you guys want to bring that up. It's the gold relative to the S&P 500, 4 or 5. But yeah, if you're looking at all these, there we go. So if you're looking at this, we're making a new 52-week high in gold, but also go all the way back to 2000. We see that massive outperformance in gold for many years. That was a decade, basically till 2011. So gold was the massive outperformer at that point. That was where you wanted to have your money, not to mention international stocks, not to mention commodities at that point. And now we're kind of looking at gold making new 52-week highs again. Most of the time, what this really means isn't that gold's the best place. It's going to make you all the money in the world. Most of the time, what this means is the S&P is kind of a laggard at this point. And that's not that's not a knock on tech stocks or whatever. It's just, hey, markets go through cycles. Sometimes gold outperforms. Sometimes gold doesn't outperform. Just pick your battles wisely in markets.
We have Colin in the chat saying that gold is better than gold miners over all time frames. You're not wrong, Colin. These gold miners kind of suck.
Well,
they have for a very long time.
When you're looking at the gold miners, you have to think about a couple things. One, these businesses suck. And that's something that, nobody wants to say, but the businesses are pretty much trash. That doesn't mean the CEOs are bad or any of that. It's just a tough business to make money in. So if you're looking at it that way, you have to understand that the only time you're ever going to make massive returns in those is when we have a precious metals bull market and everybody's excited about it, and then that risk on money starts to go into the gold miners. Recently this year, and Sam, you've pointed this out a ton, gold miners are the outperformers. They're still outperforming right now. I think gold GDX is up 20%, where gold is up 10%. So gold miners are actually outperforming now. And Sam, you also posted something about silver. I can't remember the exact number. The silver ETF, SILJ. What was those returns that you were talking about?
Yeah, so like you have the GDX, the GDXJ, the SIL, and then the SILJ. Those are the four main precious metal ETFs, and they all returned 30% or more in Q1. I think that number is lower now. I'm not sure what it is as of this very second, but it was an amazing Q1. You know, people were talking about energy stocks an awful lot, especially on my Twitter feed. You know, everyone was bullish on energy. It was the best performing sector in Q1 out of the 11 S&P 500 sectors, but it wasn't even up double digits. It was up 9% in Q1. These mining stocks were up 35% in Q1. It was a totally different game, and it was even better than a lot of the Chinese stocks. You know, I think China finished Q1 up about 20%, so it was even better than that. And China was pretty awesome in Q1. But yeah, just it goes to show that there's no fever like gold fever, Jason.
Yes.
Once these assets start trending, there's some fabulous returns.
Somebody wrote, Jason, I don't think so. And once again, it's like Sam's talking about, like I'm talking about, you have to figure out how do you quantify relative strength. And this is like a hard thing to kind of think about. But, you know, Meb Faber was one of the first people I found who did some research on this, basically finding like if you go back over a 3-month time frame, how that asset did compared to either the S&P 500, you pick whatever you're going to do it against. That's kind of how you look at that. So when Sam and I are talking about, hey, year to date, gold miners are doing this compared to the S&P 500, compared to gold. That's something to continue to look at. That's something that's significant. It doesn't mean that's going to continue all year perfectly and so on, but it is significant because it is over 3 months and it is year to date, which means this year people have chosen to put their money into gold miners. Obviously, gold has also been a place where people have put their money, but it's a much bigger market. You can't get those 100. I mean, we have a bunch of gold miners that we've been trading. You can't get those 100, 200, 300% returns in gold. Most of the time, you're going to have to go to the miners. We've had a couple great ones. Sam's had some great picks out there as well. So, I mean, you know, that's how you make these major returns in a precious metals bull market. And so just be open to, hey, the miners are trading vehicles. To me, they're not investment vehicles. I'm not going to hold any of these for the next 50 years, but they're good trading vehicles.
Yeah, I think that's what it is, Jason. And just understanding what these assets are and what they're built for is extremely helpful. You know, I don't really want to hold some speculative quantum stock in my retirement account, but you know, last year these quantum stocks went up 1,500% in a straight line higher. You know, you just have to understand what you're trading.
That's my favorite thing is when I see people be like, "Oh yes, I'm buying this quantum stock for the long term." It's like, dude, no, you're not. I'm lying to yourself. We saw the same thing last cycle too. Oh yeah, I'm buying these EV battery plays for like the long term, right? I'm a big believer in like the EV infrastructure, whatever, dude. No, come on. You get 2 quarters, it's gonna fall 90%. Oh yeah, long term, my ass, right? Like that pissed me off.
Well,
so
that's what
much.
happens though. People start out as traders and they like, I like this stock, and they try to trade it, and they're like, I'm going to sell it up a higher, and then it starts to go down. And they're like, you know what? I'm in it for the long term. And that's usually what happens.
No, I'm not a
psychologist,
the opposite.
There's definitely a bias for that.
Should be
I don't know the name of it, but it's really easy to get married to an investment.
Yes.
That started out as a trade. You know,
I was going to say that they buy it for the long term until it goes down 60%, and then they, oh shit, what do I do? What do I do? Somebody help! Like,
well, they do that as well. Yeah,
you said you bought it for the long term. That was 6 months ago. What are you talking about? Like, you know?
Well, Bitcoin's the best example of that. 2019 or sorry, 2018. You had that huge peak that happened in 2017 at around, it hit $20,000 for like a second, and it came all the way back down to 3,000. And what's funny is it chopped around 6,000 to 10,000 over and over and over again. And finally, when it went to 3, that's when everybody sold. So like everybody just sold perfectly at the bottom.
Yeah.
It didn't hit that low. I don't think it ever hit that low again, actually. And then it just kind of continued to move higher. I think COVID had a spike bottom for a second, but besides that, it's just been a lot higher ever since. So you're right. They panicked right at the wrong time. It's kind of the public's thing.
Crazy. All right, you guys have anything else? I feel we should probably hop off or before the open, before things get crazy again. I want to before we go, I will remind everyone of how to get access to all you guys. But before we do that, Pat, do you have anything else you want to add?
No, I think your guys' conversation on gold was pretty much spot on there. The miners, like they've just failed so many times. I thought that one would be the one that they finally stick it on because it has failed so many times, but that's a pretty nasty failure there. And gold has been so incredible. I mean, the really impressive stat for me is just the fact that off the 2022 lows, gold it's outperformed the S&P by 2x. I mean, it's been twice as good, and yet you couldn't get anyone to buy gold at those lows, even when it was breaking out of that massive thing. So I think, a lot of people our generation haven't seen a true gold bull market and things like that. So it doesn't excite them. But I mean, there's real returns there. And I agree. I think it makes total sense to have a piece of it in your portfolio.
And most people our age, Pat, myself included, own very little. Right? So it is what it is. All right. Hey guys, before we run, I want to remind you guys the thing was up on the screen, but Sam and Jason are partners in crime on ASC Gold Rush. If you want more of this, they do tremendous work every week. They're putting out reports, they're putting out videos, scans, charts. I'll put the link back up on the screen. There it is. It's allstarcharts.com/gold-rush. That's how you get access to their work. You guys have been kicking ass over there. And as you were saying, it's kind of been a bull market for metals, right?
Yep.
So
money is
really
good trades over there that everybody keeps forgetting about. Sam has nailed some great miners in there. So come over, check it. If you guys at the very least come over and check it out. Get to see what we're doing, get to see some of the returns, get to see some of the trades we're doing. And that's how you guys can start out.
That's right.
Would you guys say like gold miners are kind of like retail, where there's always like some that are way better than others? I mean, obviously,
but that's a really good.
You know what I mean? Because I feel like you look at GDX, terrible fail breakout, but then some of the individual names holding up just fine, right?
Yeah, no, I love that. There's a ton of dispersion in the mining space. Something like Newmont, one of the biggest mining companies in the world. It has gone absolutely nowhere since it peaked in 1987.
Oh man,
yeah.
I'm hearing about that year a lot for some reason this week.
Yeah.
Black Monday, man, Black Monday. But no, it's that if you look at these, there's so many that are doing very well, so many that are we want to stay away from, and that's why it's good to have analysts that actually understand these markets, because there's some you just want to stay away from. And there's some you want to buy. And there's some that are just trading vehicles, and there's some that are more long-term vehicles. You just got to understand what you're actually getting into, and that's what we do well at the Gold Rush.
Newmont is the gigaturd of the miners. I like that, Dawson.
Lest we forget, guys, Patrick is doing this thing at the chart report. If you don't get the chart report, I don't know why you don't get it. It's literally free. You just got to go to thechartreport.com. It's one of the last things that I read every night. Actually, might be the last thing that I read. I try to not be on the screen super late, so it's like sort of the last thing that I gets into my head before I turn on Netflix or whatever. But Patrick puts this out every single day. I've been spending, just with me personally, a lot less time on Twitter, just generally speaking, the last week is an exception to that rule. But
that's probably good for your mental health.
Yeah. I was talking about this, I think, with Phil last week, but like I think my Twitter usage is probably at like an all-time low, just in the last like 6 to 12 months, steady downtrend. This week has been a huge spike, but one of the reasons why I don't feel like I have to spend all the time on Twitter is because Patrick spends time on Twitter for me. I don't really need to, like, I don't think I missed anything, because I can pretty much get a good summary of what went down in the chart report. So get it in your inbox right now. Click on that link. It's on the screen. Go to there, chartreport.com. Sign up. It's free. It's daily. And it's, one of the easiest things you'll read, because there's no paragraphs. There's no sentences. It's just pictures. It's just pretty pictures.
Yep. The way I described it, the newsletter with no news, just charts. But we also got Spaces coming up at 11.
I forgot. I totally forgot about that. It is Tuesday. Spaces at 11. Last thing, Mr. Gatlin, his pet project has been working on the beat report. I'm going to drop a link in the chat. If you are at all interested in earnings reactions, not so much the earnings themselves, not so much like their EPS and the revenue and the beat and the miss, whatever. It's about the reaction to that. The beat report is going to be kicking into high gear starting, I guess, next week, because earnings season's coming back now. So this is also, again, free note that Sam puts together during earnings season, which is coming up, as I said. So get that. The link is in the chat right there, and you will. It'll be a new way, I think, to look at these earnings reports, because we're not looking at the numbers. We're looking at the numbers plus the reaction, right?
For sure. My mentor, David Lundgren, always says that the best fundamental analyst in the world is the market. So I just listen to the market. And if they tell me that this earnings report was good, then I'm going to take a closer look at it. And that's same to the downside.
That's right. Don't let someone like me, don't let me tell you if it was good or not. Let the market tell you if it was good or not, right? Exactly. That's right.
For sure.
All right, cool. We got Spaces at 11. I'm going live with Jeff Mackey at 1 o'clock today. We're talking retail.
Nice.
And that's what we got on the channel. So this has been fun. Jason, Sam, Patrick, we've never done this before, but this was great. We should tell Steven, JC to take a hike more often.
Yeah, this is fun. Then we can just do what we need to do. And
someone in the chat said that the show was way calmer today. I forgot the exact words they said.
We agreed too much.
I don't know. I like it.
I don't think it was agreement. We didn't agree, but I think it was just, where I've been told that a lot lately, which I find interesting. There are people who are like, yeah, I love listening to you because you're calming. And I'm like, damn, I didn't know that. That's the third time I've heard that word in the last couple days. So
it's all that futures trading,
I guess.
I can say at this point.
I don't know where that's coming from, but hey,
I don't know. All right, thanks for watching, chat. Thank you. Drop me a like if you be so kind. Shout out to the Stock Traders Almanac. Shout out to the University of Florida. Great game last night. And it's baseball season. Be safe. Go make some money. Watch your risk. Or not. Do whatever you want. I don't know. We'll see you guys tomorrow, all right?
Cheers.
I can't take no loss. I don't even know what it costs.